So good morning, everybody. My name is Matthew Burke. With me is Tania Quigley. She's my partner here at Cerini and Associates. Thanks for joining us. This is part 3 of our webinar series designed to help audit committees. It's an audit committee boot camp of sorts. If you haven't joined us before this presentation, there's 2 more sitting on our website that you can grab at any point in time. We're going to see if this continues to be something that's in demand, and if so, we'll continue doing this type of series in the future. We may mix it up a little bit because it has been a little bit consistent at the last 2 rounds that we've done. But like I said, look at our website. They build on one another, so we're not going to be really rehashing a lot in the first 2. We'll allude to them, but not spend too much time there. So you might lack the context. So go back, check those other ones out if you've missed any of them before today. With me today, like I said, is Tania Quigley. Excuse me while I shuffle papers and handle the slideshow. I've been with Cerini and Associates almost 20 years now. That picture of me obviously was a long time ago. I work with about 100 nonprofits. I'm one of the key partners that head the nonprofit services that we handle here at Cerini and Associates. Much of what we do at Cerini and Associates is working with nonprofit organizations and educational institutions. It's pretty much our bread and butter. With me is Tania Quigley. She's now partner here for our first year. She's been with us for about 15 years though. She's does a lot of the same things that I do. Plus she specializes in retirement plan, employee benefit plans, and pension plans and things like that. So between the 2 of us, Tania and I, we probably account for 90% of the nonprofit work that our firm does. So if there's any questions that you have after this presentation, we'd be happy to answer. I'm sure we can. So we're going to start with a brief recap of prior webinars. The first 2 flags there, they coincide with the first and the second audit committee boot camps that we did. The first one, we went over the general roles and responsibilities of an audit committee and the members. You know, the background on that, the charter, when to meet, the goals of an audit committee, things like that. The second one that we did was about working with external auditors because that seems to be the most common role that audit committees play. There we spoke about factors about how to choose auditors, how to confirm information with external auditors, reviewing engagement letters, going over fees, proposals, things like that. So again, take a look back at those if you haven't. And the goals of today's webinar, really to gain a full appreciation of the full depth of an audit committee's detailed roles and responsibilities, because they really aren't just limited to working with external auditors like ourselves. There's a lot more that goes into it, a lot more that can go into it, and a lot more that we hope does go into it for your audit committees that you serve on or that you work with. Now, we want to understand who the audit committee interacts with to achieve its goals. Again, it's not just the external auditors. You're going to hear us say that a lot today. There's internal auditors, there's the boards, there's external stakeholders. All of that comes into play when you're serving on an audit committee. It's not just about working with the Cerini and Associates of the world. And then finally, we'll go over risk management. That'll take a few slides to go through. There's a lot there. Insurance, technology, finance, all that other good stuff really comes into play as an audit committee. So again, while this is designed for mostly audit committee members, it can be useful for everybody, especially in this, I think, 3rd installment. Board members and staff members, they bump up against and work with audit committees a lot. So we find that it will be useful content here for you. I just want to encourage you all staff members to encourage your audit committee members and your board members to try to listen to these, to try to pay attention to these, because they have a great deal of responsibility that they may not be aware of while they're serving on these committees. Tania and I will be alternating pages, so I'll pass it off to her and then she'll pass it back to me.
Good morning, everyone. So I'm going to start with the purpose of an audit committee. So an audit committee is formed as an extension of the board to meet certain goals. So a few of those goals are to ensure there's organizational integrity and ethics. This can be helped carried out through the audit committee having their interactions with individuals within the organization and with outside parties. Also in how the audit committee handles its decision-making process. So maintaining that integrity and ethics through their actions, portrays that out to the board and to outside parties and within the organization. The audit committee should ensure there's financial transparency, that the financial information is accurate as well. So this mostly includes the audited financial statements. This is reviewed by the audit committee on a yearly basis. During this review, they should ensure that the information is provided timely and it accurately represents all the operations of the organization. Ensuring financial stability. The audit committee should be able to kind of plan and foresee that there's any reserves set up or maintaining a line of credit to make sure that in the event of any cash flow issues or delayed in payments from funding sources, that operations continue to move forward as normal. Accountability to stakeholders. We'll go over this in more detail in later slides. Transparency, ensuring overall transparency within the organization. So it's important to maintain open communication to the board and to management about the information being discussed at the audit committee meetings and on their decision making. So again, we also go into further detail of the audit committee interactions with these parties in later slides. Proper risk management, that is also discussed later in more detail, and compliance with laws and regulations are also discussed in more detail in later slides.
So central to working as a nonprofit audit committee, you really have to understand that there are many stakeholders, and we like to use the word stakeholders. For-profit organizations have shareholders, right, and other outside parties that they deal with. Nonprofit organizations, we like to call it stakeholders. There's a lot. So there's a lot of people and organizations and groups that audit committees have to deal with, have to worry about, have to contend with on a daily basis, serving their audit committee roles. So the first and maybe the most important is the government agencies, because they're the ones that have granted you the nonprofit exempt status. That's the IRS. They're the ones that allow you to conduct business and solicit funds in states, the attorney general offices and other things like that. Funding sources that tend to be government agencies, there's a lot of information that gets reported back to them. We have a lot of clients who work with Medicaid, or they get state funding from OASAS or OMH, or a ton of acronyms out there that exist in the nonprofit world. So at the federal sense, we talk about the IRS, and then the funding sources, HUD, there's uniform guidance requirements, there's special compliance audit requirements that come into play that audit committees have to ensure reports are getting to in a timely fashion and in a correct fashion. The states we mentioned, the attorney general offices, there's usually registration statuses that have to be filed. There's registration annual report filings or annual registrations that go to different states that have to be dealt with on an annual basis from these audit committees. And again, funding sources are key. Local government units, counties, towns, they may provide funding. They may have regulations that have to be followed by an organization. And an audit committee really should be aware of all of that in determining its own conduct and what it does. Actual and potential donors, individuals, businesses, foundations, they consume information provided by nonprofits, whether it's those tax returns that are public information, or whether they're financial statements, whether they're audits, reviews, things like that, that we as an accounting firm would prepare, or if it's just other information that donors that have given to you or are looking to give to you would be interested in. You know about Charity Navigator, GuideStar, all these different information aggregators online that pull together information from your organization and disseminate that almost automatically and transparently to potential donors. You want to be concerned about what they're getting, what they're reading, what they're seeing. Consumers and constituents served by the nonprofits, they obviously are the most important. They don't regulate you necessarily, but they're the ones that are benefiting from the services and from the mission that you provide and the worthy cause that has made you a tax-exempt organization. You want to make sure that the information that they're getting and being supplied is accurate. You want to make sure that the services they're being provided are what they need, they're in compliance with different laws and regulations, and that you're really meeting the exempt purpose of the organization. You may have lending, you may have banks that are giving you lines of credit, mortgages, other types of notes. Seemingly everyone got those PPP loans, right? So there's information that those banks and other financial institutions need that has to come out of your internal processes at the nonprofit that the audit committee, in a sense, has some hand in terms of the PPP loan. As a good example, there's information about forgiveness and did we spend the money properly and who's overseeing all of that. And in a general sense, the audit committee is on top of a lot of that and should have roles and responsibilities with making sure that the information coming out of the organization is accurate, it's not fraudulent, and it is what the stakeholders, in this case, the banks, need. The press, unfortunately, comes into play usually when there's a bad story to tell. So you don't want to really have that. You want to get good positive press for the great work that you're doing and the successes that you're having and the responses you're taking to the needs that are in the community. You don't want to be in the press for scandals, for lack of compliance with the regulations that are noted above, about donors having issues with you or about consumers having issues with the services you're providing. That can really spell doom for a nonprofit. So they kind of hang over everything, as does the general public. So a lot of what's going on with nonprofits in terms of funding comes from the general public. There's taxes that are paid into the IRS, there's taxes that are paid into the different states that ultimately get funneled down to the public, or the fact that you're an exempt organization allows people to give tax-free donations. So really, in a sense, the audit committee members are serving a lot of different stakeholders, as you can see here. Again, to reiterate what I said much earlier, it's not just about dealing with external auditors. There's a lot of different folks and agencies and businesses that are involved with nonprofit organizations.
So audit committee interactions. So this slide kind of goes over the different parties that the audit committee interacts with throughout the year. And this interaction is important to achieving the different goals set by the audit committee. So there's the board of directors. Communication with the board throughout the year should be occurring. But most common practice that we see is during the time of the annual audit. The audit committee also can make recommendations for the selection of independent auditors when that time comes, and communicate their recommendations to the board, as well as communicate results from the internal auditor testing that we'll get into detail later. Communication with management, the employees of the nonprofit organization. So because the audit committee plays a role in ensuring that there's financial policies and internal controls are in place, having that open communication between management and the audit committee will be sure that management is aware of these policies and are properly carrying them out as well. The internal auditors, not all nonprofits have this, but if you do, it's an independent group that handles the testing, monitoring of internal processes, procedures, and internal controls. So there's communications between the audit committee and the internal auditors to communicate, plans for testing and results of those testing to make sure that the risks that are assessed by the audit committee are being looked into and mitigated or adjusted for based on those audit procedures from the internal auditors. And again, that's discussed in more detail later. There's also communication with the external auditors. That's your independent accountants that were hired to perform your financial statement audit. We did go into much detail on this on previous webinars, but just to summarize, the audit committee meets with the auditors typically twice a year, once before the audit to go over the audit plan, and then after for the auditors to present their financial statement results, as well as any findings from the audit. And again, another time that the audit committee can meet with the potential auditors is when it's time to make the selection for an independent accounting firm.
So we'll start to go through some of those communications and interactions with the board, management, internal auditors. Like Tanya said, we're not really going over external auditors. That was last presentation, and it really took the full hour. So interacting with the board of directors, as Tanya mentioned, we typically see that most audit committees meet once or twice a year, and almost exclusively with and surrounding the external financial statement audit that we would be a part of. What we do find is that there's not a lot of involvement of the audit committee in other areas that we're talking about here today. So we're curious to see how many times an audit committee meets, and if it's more than two, we're assuming it's more involved. If it's one or two, we're assuming it's just with the external audits. So the zero, obviously, you want to at least meet twice. If you have an audit committee, presumably you need an external audit, and you should be meeting, like Tanya said, before and after. So that would be these one or two. 3, 4, and more than 4. That's showing a real active commitment of the audit committee in terms of getting involved with these other areas that we're talking about here today. And that's good. That's good to see. I'm kind of surprised that the numbers are so high. So positive all around there. So with the board of directors, obviously the plans for the internal and external audits and then the results of the internal and external audits should be gone over with the board of directors. So the audit committees may meet with the external auditors, but they should then bring those results back to the full board if the external auditors do not present to the full board themselves. There's situations where we have clients where we present to the audit committees and then we present to the boards. But most frequently, we seem to present to an audit committee who then takes our results up to the board. So the board should be at least aware of what's going on with the external audits, if there's any significant findings, if it's a clean report, if there's any major financial trends that are pointed out by the external auditors and things like that. And really, I would encourage you to probably have your external auditors present to your boards also, because it's good to hear that straight from the horse's mouth, so to speak. Any management reviews, risk management reviews that take place should be shared with the full board of directors, and we have several pages on that to be covered a little bit later here today. Internal controls, the systems, the processes, the checks and balances, audit committees tend to be dealing with that too. They tend to have a hand in the risks, and controls and systems and processes are another form of risk. So internal controls, we're talking about who does what types of segregation of duties are in place. Are there any vulnerable areas within the organization's processes that the board should be aware of and potentially working with management to help close up? Preventing and detecting fraud is obviously very important. That doesn't all just fall on management. The board and thus the audit committee should be involved with that as well. Legal regulations are important, especially coming from your funding sources. There's a lot that can come into play in terms of compliance that management and the board may not be fully aware of, that the audit committee can certainly supplement their knowledge base and awareness of, pointing out that there are certain compliance documents, compliance certifications, audits maybe that have to be taken and dealt with as part of dealing with the funding sources, usually from the federal and state governments that an organization might deal with. Tax matters and reviews. There's a question on the Form 990 with an explanatory block there asking how an organization reviews its 990 before it's filed. Does the board look at the 990? How seriously does it take it? Does it review it in depth? Does it get presented by the external auditors or the audit committee? That's something that's also under the purview of the audit committee itself, to make sure that if there's any significant changes to the 990 from a prior year in terms of the form or the content, that the board is aware of it when they're reviewing. If there are any state regulations that they should be aware of, or new registrations that have to be implemented for different states, board should be aware of that. If there's any tax issues, you're tax exempt, but there's something called unrelated business income tax that you may be subject to depending on the types of operations that you have. So you want to make sure that the board is aware of that also, and the audit committee can be a good channel to make the board aware of that. And then obviously any other internal policies and governance. We'll talk about that later too. There's a whole slew of required policies that nonprofits have to have. There's even more recommended policies that nonprofits should have if they apply to them.
Okay, to continue interacting with outside parties or with other parties, there's the nonprofit personnel. So this includes management and internal auditors. So the audit committee should discuss the following with its members of management. As Matt mentioned before, internal controls, the checks and balances, systems and processes that are in place. So the audit committee should make sure that, management's informed of these policies. These are usually documented in an accounting policies and procedures manual. And that should be reviewed and updated maybe annually to make sure that the processes in place are is documented in that policy. If there has been any changes with, due to COVID, where everything has gone to a remote work environment or a hybrid, that should all be updated in there. And any updated controls, processes in place should be communicated to management as a result of those forced changes. The results of risk management reviews, again, we'll cover that later in depth as well, but there should be open communication between the audit committee, how they're managing the risks within the organization should be made aware to management as well. The internal auditors, again, if you have this function within your nonprofit, so the audit committee has the responsibility to identify risks and those risks, and that those risks are being managed properly. So a way to do this is to have communication with your internal auditors to develop a work plan, to perform testing on areas that are focused on the audit committee's risks that they identified. So for example, there could be risk of non-compliance if an organization received a contract from a new funding source or an extension to an existing program. The internal auditor can develop testing procedures to ensure that those services are provided and are being in compliance with the contract, and that there's proper documentation to support those services that are being provided as the organization is being paid for those services. The results of the risk assessments in the internal auditor testing in their projects. So communication to go over the testing procedures and the results. This allows the audit committee to understand what they did and how they came about with their results, so that audit committee can then properly communicate that to the board or to other parties as needed. This can also support if the audit committee's identified risk is now mitigated because of how the results panned out, that there were no issues, or there could be some new risk identified as a result of those procedures. So then if the audit committee is aware of those new risks, they can then take further action to address it.
Before I move on, you all may be wondering, should I have an internal audit department or committee or whatever? We find that this is most useful in a highly regulated environment. If you have medical billings, if you're getting funding from Medicaid or for fees for service provided where, oh, sorry, I went ahead, where the risk of non-compliance is significant and can have really bad ramifications in terms of recoupments or penalties and things like that, it may make more sense there to have an internal audit, internal audit department or separate people. It is costly. It is something that may be a luxury item for an ordinary nonprofit that doesn't have such complex rules and regulations. So just keep that in mind too, as you're going through this. Now, skipping ahead to risk management, which will be the bulk of the rest of what we talk about here. In terms of overall governance, this is important. Policies, some of these are required, as I mentioned, some of them are not, and they're just best practices. What I would recommend before we go into any of these is that you want to make sure that you have good legal representation in the area of nonprofit law. I know every board has attorneys on it, but not all attorneys are specialists in nonprofits, just like not all accountants aren't specialists in nonprofits. I'm not going to sit here and talk to you about audit committees of SEC, publicly traded companies, because I don't know about that. Similarly, nonprofit attorneys should be the ones that are talking about policies, bylaws, things like that as they affect nonprofits. So I'd recommend that probably on about an annual basis, have someone who is familiar with nonprofit law look over your different policies, your bylaws, to make sure you're still in compliance, because things do change. And what may have been acceptable 10 years ago may be violating law today. And that's part of why we even are talking about audit committees, because audit committees are now required. They weren't always required. They're required by law. Along the same lines, conflict of interest policies are required by New York State law now, and certain elements of those conflict of interest policies are required by New York State law. So if you have a conflict of interest policy, again, that's 10 years old, it may be stale, it may be out of compliance. You want to make sure you're looking at that. Other policies that are important, fraud and ethics policies, whistleblower policies, they kind of go hand in hand. So whistleblower protects people who may be identifying or making you aware of frauds that they became aware of, or improprieties or unethical behavior, things like that. You want to make sure that you have that in place. Record retention is something that we're seeing more and more of now, especially in this digital age where so much lives in the cloud. There's questions about how long I have to retain documents for in paper form or in digital form. And there's certain policies that your funding sources may have. There's certain requirements that state laws may have for this type of stuff. So you want to make sure that you're not destroying documents prematurely. On the other hand, you want to make sure you're not hanging on to everything and costing the organization dollars in terms of wasted space, whether it's digital or analog, right? If it's sitting in file cabinets or in external storage, you don't want to waste there. You want to hang on to anything for too long. Another one that we're seeing more popular these days is the gift acceptance policy. So if I were to donate a boat to a random nonprofit, would they accept that if they have nothing to do with boats? What would they do with it? Would they sell it? Would they cash it out? If I were to donate stock to a nonprofit, how would they deal with that? Do they hang on to that? Do they have to cash it out? So it seems like it might be a little bit unnecessary, but if you are getting approached by donors with sort of unusual donation requests for them to give to you, you might want to have this acceptance policy that defines what you will accept, what you won't accept, and what you do with the kind of weird donations that you may get from time to time. Internal controls, very important. Documented processes and procedures. All too often when we perform audits of our nonprofits, we find that there are not documented processes and procedures for anything other than employees and payroll. So it's important to know the flow of information into and out of your accounting and your finance systems, if only for continuity. Turnover is a real threat to everybody, especially in the nonprofit world where, the salaries for certain positions may not be as high as they are in the for-profit world, and you may experience that constant churn. So an accounting policies and procedures manual, as well as others, help with that transition, with that turnover, to help people know what they're doing going forward. But besides that, you want to have built-in segregation of duties. You want to have prevention and detection controls over fraud. You want to make sure that you're complying with the different compliance requirements that your regulators or your funding sources are putting in place for you. That should all be baked into your systems, your processes, your accounting, your finance, and so on, policies and procedures. So we find that this is something that has been lacking. And what I want to stress also is, if you do have one of these or multiple policies and procedures manuals in place, make sure they reflect reality and make sure that they're updated at least annually to show who's still doing what. If the digital age, and especially with the transition to remote working caused by COVID, I'm sure that changed a lot of the processes and procedures that are in place now. So it might be time to dust those off, update them, make sure they're reflecting what's really going on. And we find it's a good way as an audit committee to understand what's going on within the organization and potentially point out areas for improvement over the systems and the processes and controls.
So effective risk management as it relates to the government. So more specifically with the IRS. So the IRS grants the organization your tax exempt status. So continuing to function that way is important to make sure that the organization, continues in that route. So taxes, managing, so is the organization operating within its mission and exempt purpose? So I think, as Matt mentioned before, you could have exposure to unrelated business income tax if you're performing any activities that are not in line with your mission or your exempt purpose. Managing risks relating to your exempt status. Are your 990s being filed on time? Once 3 years go by without filing your 990s, you automatically lose your exempt status, and then you have to reapply for it again. So making sure those 990s are filed on time, or if the 990s won't be filed within its first deadline, making sure the extensions are filed so you get that additional 6 months to file. And also as making sure that the organization continues to operate as, as a public charity to maintain that exempt status. Reviewing your Form 990 and state filings. So the 990 should be provided to the audit committee, as it's provided to the board as well, to review that the financial information is accurate, along with responses to a lot of the compliance questions. Matt mentioned that before, that a lot of this, governance compliance is on the 990, and to making sure that you're properly responding to those questions. The 990 includes schedules to it, so making sure that the schedules are properly included in that 990 as well. Unrelated business income tax. So if the organization does have any activities that they're receiving income from that is subject to UBIT, there's a required annual filing for this. It's the 990T, and there's some state forms that are associated with the 990T. So just making sure that the organization has policies in place to make sure that they can identify these activities and properly report them on the 990T, and then pay the taxes as they come due with the 990 deadline. Is the organization operating compliance with the internal revenue code as a publicly supported organization? So again, are they continuing to operate for its charitable purpose? Has the organization steered off the path of its mission to provide new programs? Just making sure that the operations in place of the organization are still compliant with what it was formed for. And then if not, they could always have some amendments to your mission or your programs that you have set up when you first applied as a nonprofit organization. Effective risk management for regulations. So state laws and regulations, specifically for New York nonprofit organizations, maintaining compliance with the New York Nonprofit Revitalization Act. I know we went into detail on that in the first series of the bootcamp. So just to summarize, just making sure that the organization is following those audit and review requirements once they exceed a certain threshold of revenue, and that they are implementing policies just such as like the conflict of interest policy, whistleblower policy that Matt mentioned before. Compliance with contracts and funding sources. So are there certain service levels being met? Are they properly being provided? Supporting documentation should be maintained for all services being provided. Is the organization compliant with its funding sources for their own reporting requirements? And again, external reporting requirements that may be needed. So for example, organizations that spend over $750,000 of federal funds are required to undergo a single audit. So the organization should have, and the audit committee should oversee that the organization has these policies in place to be able to identify these federal sources of funds and to have the financial reporting set up to where they can identify these federal expenditures to be able to properly meet those reporting requirements. There's also Medicaid funding. So organizations that receive over $500,000 of Medicaid funding, are they having their consolidated fiscal report being certified by an independent auditor? Do they have a Medicaid compliance plan in place? So making sure, these specific funding sources are being, funding source requirements are being met. Compliance with billing protocols. These are usually set by your funding source for the services that you are providing. Is the organization billing at the correct rates? Are there proper documentation to support the services being billed? Are there descriptive billing procedures to help reduce the risk of any denied billing? So having the staff that handles the billing of these services, knowing that they have like a policy to refer to and are aware of the billing protocols that, the services, the documentation and the billing is being proper to reduce any risk of denied billing. Review of government agency audit findings. So before, as I mentioned, government funding is subject to certain audit requirements performed by your external auditors. There's also auditors at these agencies that will come in to perform their own financial or programmatic audits. So the findings from those audits could result in recoupments of any previously received funding or adjustments to future contracts if there is any issues. So regular communications with the audit committee between their internal auditors or their compliance officers can help reduce the possibility of having any significant findings from these agency auditors. Interaction with your compliance officers. So again, the audit committee should meet with the compliance officers. Those officers are more involved and in depth with the organization's programs, overseeing them, making sure billing is proper, identifying any issues. So communication between the audit committee and the compliance officers can help the audit committee assess any risks associated with non-compliance.
One of the questions we've gotten through the chat here is about compliance and things like that. So some organizations may have separate compliance committees. If you're heavily fee-for-service, Medicaid funded, risky, highly regulated areas, it might make sense to do that, where you kind of carve out from the audit committee and finance committees the separate quality review and internal audit, quality assurance, and overall corporate compliance into a separate committee. It's something we're seeing more and more frequently because the regulations are really intense for some organizations. Most of them, they don't have to deal with it in that great a length, but for those that do, consider a separate corporate compliance or whatever you want to call it committee. Obviously, any part of risk management involves finances, and speaking to a couple of accountants, you're going to hear a lot of that from us. So there are finance committees, which sometimes are blended with audit committees. That's another Q&A that came up. They probably should be separated at this point. There are some rules and regulations about overlapping between the finance committees, the treasurer and on the audit committees and things like that. So you want to make sure, again, you have proper legal representation, looking at that, making sure that your committees and your board are properly constituted there. But besides that, so the audit committees, they don't go into the same depth or detail that a finance committee would, but they would want to point out risks and make sure that the organization is aware of risks and responding to risks as they relate to finance. So while the finance committee may be more hands-on, working with the CFO and controller, audit committee is looking at it from a much higher point of view and trying to figure out ways to make sure the organization is considering everything. Let's put it that way. So the financial stability and position of the organization, does it have financial resources? Does it have liquidity issues? Does it have weaknesses there? And if it does, how is the organization responding to that? Investments, there's laws and regulations about investments. So if you have money sitting in an investment account as a nonprofit organization, you have to make sure you're complying with the New York Prudent Management of Institutional Funds Act. It's a terrible acronym, NIPMIFA, NYP, MIFA. Again, the key here is that there's strings attached to having investments, and you want to make sure that you have proper policies in place, that you're investing in prudent funds. That's from the state, not from me, that prudence word. And that you're monitoring your investment activity properly. If you have a financial advisor that's working with you, make sure you're monitoring them, make sure the fees are appropriate, make sure they're doing a good job for you, benchmarking them. All of that would fall under the auspices of risk management from a finance standpoint that an audit committee can get involved with. Debts are important because all too often organizations are lacking funds, or they have shortfalls, or they have collections issues with their receivables, and they need lines of credit and other sources of financing to keep them afloat. So this kind of goes along with the stability and financial position. If you have a weaker financial position, are you able to gloss over that or get through your day-to-day operations with debt financing? If so, are there covenants there? More risk. What if you fail a covenant? What happens? How do you pay that debt off? How do you refinance it? Do you just get a waiver? So a lot comes into play here. Refinancing and repayment plans. We see a lot of debt for nonprofits that have balloon payments, and there's no real plans to handle that balloon payment when it comes due 5 or 10 years from now. You need to be planning for that, sooner rather than later, and you can't assume that a refi or something like that can just take that balloon payment out. The ongoing performance of the organization, benchmarking it, looking at it from year to year. Is revenue growing? Are costs growing? Are things shrinking and contracting? Is your liquidity position getting worse? Are the cash flow crunches getting worse? All these are types of questions that audit committee members should be aware of. And if there are issues there, you have to raise it to the level of how do we respond to this? Again, the finance committee would handle a lot of this also, but the audit committee should make sure it's on top of this as well. Concentration of revenue and support is a key risk area for a lot of nonprofits that we see. And really what this is saying in a fancy way is, are you really solely funded by one or two or very few financial resources? It could be a government agency that's giving you all your revenue. It could be a major donor. So what happens if that government agency loses its own funding and has to cut your grant? What happens if that decides elsewhere and work with another organization? What would that do to the organization? What types of contingency plans are in place for you in case these concentrations go bad? And we see that happen. We see a lot of organizations that are reliant on foundation support, and those foundations may change their mission and they may look for different types of nonprofits to support, or they may cut their $300,000 grant to $100,000. And what does that do to the organization? It tends to create panic and chaos. And if you plan ahead, you can avoid that painful reality that may happen down the line. Hopefully it never does. Cost structure, obviously very important. Proper spending. Finance committees are responsible for budgets and budget to actual reporting. But if you're not meeting your budgets, or if you're falling short, or if there's issues there, or if you have bloated spending, it creates an existential risk to the nonprofit that audit committee members should be aware of and should be commenting on and should be raising issues about to try to resolve and help. Insurance levels is another one that tends to fall in the cracks. And finance committees may or may not look at this. The CFO controller may or may not handle this directly, but there's a lot of insurance needs that organizations have. And again, here we recommend that you speak with an insurance carrier or broker that is familiar with nonprofit, not every type of organization out there, specifically for nonprofit. So it's important for audit committee board members. D&O insurance, property and casualty, cyber insurance is very important now. It's something we're seeing more and more of. Tend to be cheap policies out there that provide a lot of coverage, but a lot of organizations don't have it because they haven't thought to get it. But now again, especially because COVID made everyone work remotely or differently in the past year, you should be looking at that and make sure that you're covered there. You're handling personal health information. That's something that we see a lot of. You want to make sure that you're properly insured there and that that's baked into your systems and processes. You want to look at your premiums, your legal requirements, all that other stuff. And insurance, you know, it blows out. It's a pretty wide umbrella that covers a lot of different things that you should be aware of and looking at.
So risk management as it relates to personnel. So having a human resource function, whether it's internal or outsourced, that can help manage, your employee relations and reduce any risk of noncompliance as, with laws, state laws as an employer. So is there documented policies and procedures? The employee handbook that usually carries over, applies to all your employees and carries over year, but it's good to review and make sure it's being updated for any new laws that are in place and that it best fits the organization's policies and the type of employees that you have. So again, with COVID, there could be some new procedures that are being implemented, and if that's the case, it should be making its way into that employee handbook. With HR, there's always, making sure you're compliant with ever-changing regulations and rules, making sure that the organization's compliant with sick leave, paid family leave act, certain rules like that give the benefits to the employees, that the organization is properly carrying that out. COVID and other workplace safety matters. By now organizations should have their plan in place that follow the CDC guidelines for making sure, the employees and any visitors that come into your organization are safe, and that you're following these protocols, taking temperatures, signing in, signing out, filling out those forms, making sure that, those standard questions of fevers and contact with anyone with COVID, that all that is being properly implemented and taking place. Staff levels. So having an organizational chart is good to see, where each employee of the organization falls into. The audit committee can see if there's any gaps in personnel that's needed, any departments, if there's certain work that could be segregated based on how the organizational chart is currently. Again, as new programs are added or as staffing changes, the org chart is something good to go back to see how things could be changed or if there's any new hiring needs for staff. Operating workflow, so seeing which department handles certain operations. Is this operating workflow in line for the organization to help reduce any kind of risk that the audit committee has identified before? Information technology. So the organization, either you could have an IT person, on payroll, or you can outsource this function. So we see a lot of organizations outsource this function because it's very involved. So there should be, policies and procedures in place that's appropriate for the organization size. For their employees, do a lot of the employees go off-site to make sure that the information that they carry with them is secure. So these policies and procedures that are in place can help reduce the risk of data loss or fraud. Security, are there proper security policies in place for use of company computers, making sure that only authorized individuals that can have access to certain privileged information are only able to access that. So making sure that, employees have the proper access to certain files within the security policy is good to have. Disaster recovery. Most of the information we see is becoming more, on the cloud, stored on the computer. So if there's any, there should be a plan in place to have disaster recovery. Are there frequent backups of your data so that in the instance where there's a loss, the policy should be in place to where you can easily recover that data in the event of an unfortunate, disaster. Fraud, so there should be fraud policies in place. Again, this should be specific to the organization's programs, and it should be communicated to all the employees. So the employees should be aware of what constitutes a fraud and how they can communicate that information. And that's also outlined in the whistleblower policy. So making sure that the whistleblower policy is perfect for the organization, and as far as how the different programs that they offer, and how the organization can, the employees of the organization can make that contact to, to make aware of any kind of fraud instances that could or could not be there. So that's, I don't know if you have anything to add, Matt, for that.
No, not there specifically, but that kind of brings us to the end of the planned presentation. Just to sum it all up, you've heard us say, and you've seen on these pages, policies and procedures about 1,000 times. It's very important to document everything that you can possibly document. Excuse me. And as audit committee members, you want to make sure that your organization has in place the proper policies and procedures so that you can review them and make sure that they're up to speed and on par with what they should be, to make sure that you're complying with regulations, to make sure that you're complying with New York State law, make sure that you're complying with funding source regulations and requirements, whether they're reporting or otherwise. So documenting things is very important. And again, obviously, as the nerd accountants on the call, and I know a lot of you are too, we're going to recommend that. Make sure that everything is written down somewhere, make sure it's current, make sure it's blessed by somebody who's an expert in the field that you're documenting, whether it be insurance or legal, finance, IT, whatever it is. And I think the other key takeaway is there's a lot here. This presentation wasn't just dealing with your external auditors. We did that, 3 weeks ago in our second installment of the series. So that's definitely a major part of what audit committees are chartered to do, is deal with external auditors like us. But there's a lot more that they can be doing and a lot more that they should be doing. And that too should be written into the charter, so to speak, of the audit committee. So it all goes back to what's documented, what should the audit committee be doing. You as an organization have to decide that. Here, in a sense, is your menu of things that an audit committee can take an active role in dealing with for you as an organization. So we're hoping that this was helpful to you all. Like I said, this is a 3-part series. This is the last of the 3 parts. Sorry, I'm reading Q&As as I'm doing this. New York State law requires a whistleblower policy to do. Okay, so there's a few questions here. Let me see if I can answer these in real time since we have some time. The first one, New York State law requires a whistleblower policy to be distributed to all, I guess, of a nonprofit organization's volunteers. Do you see that actually occurring in practice? Is there more practical alternative? One, I'm not an attorney, so I'm not even going to comment on whether or not that is a law or not. I've never heard of that, but if that is the case, it's not something that we do see taking place in practice. Not sure it's something that we would see though as external auditors anyway. It's not something that we would look at. So the last part of our series went over our responsibility as external auditors, and it's really not to ensure compliance with everything because we don't have legal backgrounds, we don't have insurance backgrounds, we don't have IT backgrounds. If we become aware of issues, we point them out to you. So I'm not sure that I've seen that. I'm not sure that I'm aware of that. I'm not sure if that's an actual legal requirement. I would definitely make sure that your attorneys are on top of that. And if there's a more practical alternative, it'd probably be to post things online on your website, and whether or not that constitutes distributing to all of your nonprofit organizations, volunteers. That's something we're seeing more and more of too, is this transparency of policies. So a lot of organizations realize that their 990s live online. They live on Charity Navigator, they live on GuideStar, they live all over the place, the State Charities Bureau website. Some organizations are posting the audited financial statements that we would prepare for them online. Not very many, but some of them are. Some have annual reports that are going online, and a very select few are posting a lot of their governance documents online too, in the interest of full transparency, so that all those stakeholders that we talked about in one of the first slides can see very clearly what the organization is up to and that it takes compliance seriously. So I think if you have a whistleblower policy and you're required to disseminate that to volunteers or anyone else, if you want to create a portal for that on your website, that might be something that's worth exploring for sure. Another question, our finance and audit committee members are working full-time elsewhere. They attend regular finance committee meetings and board meetings. To ask them to be involved in this level of detail seems unreasonable. It seems there should be a level of trust in the management. Well, my answer to that is that having an audit committee is a requirement by law, and having certain functions served by the audit committee is also a requirement under that chapter of the New York State law. Again, not playing attorney, I just know that it is true and it is real. You don't necessarily have to have the audit committee handle all of these different things. It's, like I said, more of a menu approach. Most audit committees don't get involved to this level of detail, but they can. And we think for more complicated organizations that have a lot going on, that have real risks, that have exposure, that have faced penalties and violations of regulations in the past, I think they should have their governance body, whether it's the finance committee, the audit committee, and board members, more involved. I think that's a key part of really any nonprofit governance structure. And ultimately, board members are on the hook personally for liabilities that may arise from the organization's misgivings and misdoings. So if you're going to join an audit committee, I think you have to do it with a full heart and a realization that it's going to be a level of effort that's probably pretty intense. You know, it's not meant to be taken lightly. So if you have the time and the resources and personally to do it, you should. If you don't, and if you can't really devote the time and attention to this, you probably shouldn't get too involved, in all honesty. We want to point out the next, so as a nonprofit-centric accounting firm, we give a lot back to the community. There's a lot of information on our website, and something that we're doing, our founder and namesake, Ken Cerini, he's the moderator for these Cerini Nonprofit Connections that we have on a monthly basis. And May 11th, which I guess is next week, we're doing one on social media strategy with our guest speaker, Michael Balavi of Help Good. He's the CEO there. So every month, Ken interviews another member of the nonprofit world, whether it's a service provider like Michael here, or like us, or nonprofits themselves, or attorneys, or whoever, things like that. Information that's relevant and timely for nonprofits. So keep your eyes on this. It's through Facebook Live or Zoom. There's a lot more information on our website. There's newsletters that we publish. There's webinar series like the one you're sitting through today. There's a board guide that we have that we produced in-house that goes into topics that board members, not just audit committee, but board members should be aware of, similar to the presentation here. Again, just trying to educate the community and make sure everyone is aware of what they're getting involved with when they get involved with nonprofits. So if there's nothing else that anyone has to say, we're going to close this up. Everyone, thanks for joining. Be on the lookout for more information from us in the future, and good luck with everything.
Take care, everyone.